let's get right into it. We are seeing a fundamental break in the tungsten market. Forget normal cycles. What we're looking at is a structural dislocation.
This is the only number you need to care about right now. The arbitrage spread for APT, that gap between the China domestic price and the European import price, has just blown past $1,300 per metric ton unit. That is the widest it has ever been, period. This isn't just a signal, it's a siren telling you the market is fundamentally broken.
And just look at the scale of this gap. It tells the whole story. You've got domestic Chinese APT trading under $1,850, while buyers in Europe are being forced to pay over $3,100. Come on, that's not a market premium. That is a complete and total structural disconnect between the world's biggest producer and its key export markets.
So let me be absolutely clear. We are not talking about a simple price rally here. This is not about classic supply and demand fundamentals. What we are witnessing is the structural dislocation of the entire global tungsten supply chain.
You know the root cause for all this?
It's not geological, it's political. China didn't just restrict exports. No, they fundamentally re-engineered how the material leaves the country. They centralized all of the control.
So this is the new reality of the supply chain. You've got all of China's supply getting funneled through this tiny little choke point. We're talking about a handful of licensed exporters, maybe 15 entities in total. This creates a completely artificial bottleneck. And the result? Well, if you're a buyer in the West, you're now forced to bid completely blind against everyone else for whatever little allocation these new gatekeepers decide to release. And the consequence of creating that choke point? It's simple. The spot market is dead. It's gone. Price discovery as we knew it is broken. Your ability to get your hands on material is no longer about the price you're willing to pay. It's about whether you can even get an allocation in the first place. This chaos in pricing, it pretty much paints the new market map for us. That massive APT gap between China and Rotterdam, that's just the beginning. Take a look at European scrap trading at a discount to Indian scrap. Every single one of these price points is its own little pool of liquidity now. And believe me, the arbitrage opportunities between them, that's exactly where the smart money is flowing. So you're probably asking, who's making money on this? Well, it's basically three groups. First, you've got the physical traders, the ones who can actually navigate this mess and capture that huge arbitrage spread. Second, anyone who's sitting on carbide scrap. Listen, your inventory is no longer just inventory. It's a strategic asset and it's appreciating by the day. And third, you have the new intermediaries, those licensed Chinese exporters. They're proving that controlling the flow of the material is way more profitable than actually producing it. But here's the thing. While everybody is fixated on APT prices, they're missing a really critical forward-looking indicator. There's another data point out there that's screaming where this is all going next. And that indicator is tungsten hexafluoride, WF6. It's a high-purity gas, and it's used in one very specific, very critical industry. Here is the hard number pulled straight from customs data. China's exports of WF6 absolutely collapsed. We're talking down nearly 39% year over year for January and February. This isn't a guess. It's a measured, recorded drop in a critical upstream material. So why does this matter so much? Because WF6 is absolutely essential for making advanced semiconductors. This collapse in exports is a leading indicator. It's signaling a massive future demand shock coming straight from the chip sector. It's telling us there's a downstream supply crisis on the horizon, that the mainstream tungsten market has not even begun to price in yet. Now, with China's primary supply all choked off, the market is scrambling for alternatives. And the most important alternative right now is India. But let's be clear, its role is not about replacing China's volume. It's about one thing and one thing only: providing immediate liquidity. The price action for Indian FOB scrap confirms this completely. It is the sharpest rally you see on any chart, because it represents the most liquid, most accessible pool of tungsten units on the entire planet. India's scrap price has become the de facto global benchmark for immediate physical delivery. And the crucial difference here is time and access. Trying to get material out of China? You're looking at months, and it's all based on who you know. Getting scrap from India? That's a matter of weeks, and it's based purely on price. India is the market's only real pressure release valve right now. Okay, so let's talk strategy, the playbook. What are the smartest players doing at this very moment? First, they are stockpiling carbide scrap. They are not selling their full inventory into this rally because they see it going much higher. Second, they're locking in any long-term supply contracts they can get their hands on immediately. Third, they're avoiding the spot market unless it is absolutely critical. And finally, they're systematically and aggressively working to reduce their dependency on any primary material that comes out of China.
So here's the main takeaway. If you're sitting there waiting for this market to correct, for it to mean revert like a normal commodity cycle, you are going to be left in the dust. The old models just do not apply anymore. And that really brings us to the final thought you need to leave with. Just remember this. The bottleneck in tungsten right now is not in the ground. This isn't a geological problem. The constraint is political. And that means it is not going to resolve until the policy that created it changes.